It's 2:45. Welcome to next episode of Blockrevision. For today, the bad news is that gas prices in Europe may triple this winter. The good news, however, is that they will probably not running out anytime soon. So how could we make advantage of this scenario, this possible peak of a panic on the energy markets? Today we will talk over about stock markets, cryptocurrencies, indexes, but especially commodities, as the trade idea aims to this topic. So let's get into new episode. So I will jump at first to economy view and we'll head to the main topic of today. European energy crisis deepens as power prices reach records. So right now the markets are expecting to have the energy prices lower by winter. We are expecting this to get to the unseen levels before, just because historically low nuclear power output and low hydro reservoirs across Europe are making shortfall in supply. Right now, this shortfall supply can only be met with this dispatchable sources like coal and gas. So with this, many of governments were already issuing warnings about narrowing margins between supply and demand. How can it be replaced? That's the main topic for now, in order to manage somehow with this kind of a difficult situation. Right now we even have a kind of problems extended to debt sizes that Finland resulting blackouts this winter, and that's the not only one jurisdiction that is claiming that the prices of whether it's especially gas but also oil may double or even triple this winter, and may crash afterwards, but by then there will be a kind of a hectic period for energetic policy. So that's from Europe. Right now that may get quiet, that problems may get quiet if we have seen this inflation data lower. Right now we have just found that in France inflation rate year over year has aligned with projections but still is climbing up. Previously we had 5.8, right now 6.1. The similar scenario is right now in Germany, where we just have had a little bit more topish reaction, but still as bankers are just worrying there might be head fake in inflation data. So that's something that needs to be pondered about, is that the consumption right now, during this summer period might be a little bit tightened due to many of customers being afraid of those inflationary pressure. They have just stopped or slowed down their consumption expenditures for now. So the reaction that may come to during this fall may bring another outcomes in terms of those gauges. We have topped for now CPI gauges, but sticky price CPI that is shown exactly at this image right now is still increasing while flexible inflation is declining. So sticky price index measures inflation in goods and services where prices tend to change more slowly. So these are different cases where we still expect the prices of services and some of the goods to climb up, whereas commodities are expected to also get further in prices, but in some terms it may get lower. So how can we get advantage of it? The answer for us investors and traders might be a little perverse. So stay by the end, I will explain you why. Right here, job switchers see record surge in wages. So that also finds that we have noted a jump by a record. It was around 7% on average in the 12 months. Right now, these are people that have switched their jobs, could brag by the rise in wages by that amount. That's kind of satisfactory, but regarding the inflation we are right now going through, there's not really something that we may get really joyful about. So right now the gap between job stayer and the job switcher right now is the widest since 1997. That's why the environment we are right now going through after this pandemic time is switching and reshuffling the order. There is more demand for specialists in different sectors. That's why there are more better profits in terms of taking those occupations. So even with these job openings have eased in recent months, and they remain still at historic highs. That means a lot of opportunities for such workers that right now are searching for something better. So if you just are complaining about your wage, that still might be not too late for a little tweak, if you know what I mean. Mortgage rates swing back up, hitting 5.2% in volatile markets. So many of those that are really getting into buying a new house, they might be cheerful. The market is in kind of a desperate need for those higher mortgage rates, but standing in a position of those that are buying, there is a little bit more troublesome for those that are wanted to have this inflationary pressure being eased. So right now we can find that for one side there might be favorable, but on the other, and by large for the economy, higher prices or higher rates in mortgage rates will speed up just the possible market, the housing market, and that's why those inflation will still get more advanced to the upside. In terms of inflationary period, we still haven't got over this one, and the CEO confidence of small businesses right now are suffering. NFIB optimism minus planned wage increases right now is just leading US CEO confidence. That's why we should still be concerned, even with these large companies that are sitting on cash. Those smaller businesses right now might have a more difficult time. As a kind of a positive in this situation is that US Credit Impulse Index finally recovering. We are right now at the 5.75 level, so that means we right now at the very good position in order to start thinking of another cycle in terms of credit impulse right after this drop been seen during this pandemic times this year. US business credit cycle also looks like it may get better in the times to come. So right now, in terms of housing market, it's, I wouldn't say it's a housing bubble right now, because many of US citizens want to make over even $100,000 to willfully sell their homes at a major discount, and that's why this market should move forward. So that's from more positive side, as well as inflation expectations that right now are on a better position than where we were back in April, where many of those asked for projections, those people surveyed in those publications have expected that inflation will still climb up in a fast manner. So that was the survey prepared by New York Federal Reserve this week, and expects this to get down the inflation even down to 3.2% next year. So also bond market expectations are finally having back in on 10-year break-even. 10-year break-even is right now around 270s to 80s, whereas that were even above 3 points back in June. So right now we can find that this situation is favoring this inflationary expectations to get down eventually, and that's also bodes a little bit better for the future. In terms of market outlook, let's have a look at the market outlook, and starting with major indexes. On S&P 500, we have stopped at the 0.5 Fibonacci retracement. We are still on a decisive point in terms of whether we are going forward or just hanging a little bit more in this area. So S&P 500 is on a most decisive point right now, whether we are entering a bull market or still staying with bears. That is also of much of importance because we have just surpassed the recent high that will have an impact of this Dow technicality, within which we can start building from now a higher lows and higher highs structure. That would mean to bull market and reverting this bullish sentiment around. So that's S&P 500. In terms of other major assets, we can find that we have just got to a very important points on gold as well, and Bitcoin that is right now at the levels that might coincide with a stronger push up in the days to come before Ethereum March. So possibly Bitcoin will have another move forward into closer 30k. Right, so in terms of gross net overall prime book, we are right now near the top of a bear market rally. The environment we are right now facing is an inflationary and risk of background within which the road might be still bumpy. However, more and more hedge funds are noted to chase these gains even further. Right now, even if we are in a decisive point, there are more and more projections in which there will be a bit more volatile period ahead. So we can find that those hedge funds right now are not only repositioning their portfolios, but trying to chase the market. That's what those data shown us. So many of those moves hasn't been voluntary and weren't really planned at first, as such acts as short covering and unwinding of hedges been noted. So there might be kind of this long cut by the leveraging on the market soon, with this greed being turned up. So that's why I do expect maybe some correction around those levels we are right now facing. In terms of US Nasdaq 100, we can find that technology sector has surpassed recently healthcare, that has suffered the most recently. So there might be a return of a tech sector, but we need more justification in getting through this trend line higher. So many of those managers of hedge funds are expecting the trend to extend in a further manner. So trend following funds right now, after this drop, after this bearish positioning, trying to revert their positions and eventually may lead to some bigger moves on the upside. High short interest index, that's the one that was very carefully watched by many of speculators in the 2021, has right now finding a revive. So we are trying to get back to this uptrend with this projection been made. We may find that If we won't get over this recent low, there will be possible return back to a bearish tendency. But before this one will happen, we may find there will be more short interest in constructing kind of local tops. That's what possibly been noticed recently on the trade desk stock that has surged by around 30%. So we can observe those stocks with highest short interest, such as Bed Bath and Beyond or Intercept Pharmaceuticals, for a possible short squeeze. Also among them, interesting is Microstrategy, that recently has suffered nearly the most among all stocks. So with this crypto being return to more to bigger interest from investors, we may see this kind of squeezes appear. In terms of crypto outlook, we've recently have discussed that Tornado Cash crackdown has been that one that shouldn't be really prone to those regulations, as it's based on a decentralized algorithmic that is unstoppable but by any jurisdictions. So even with this DNS being taken out and this websites of Tornado Cash being blocked, Tornado Cash still works. As we can find, Tornado Cash developers described it as a privacy app that doesn't technically hold users' deposits, and its original developers say that they no longer have control over the platform. Like many other decentralized financial projects, Tornado Cash is overseen by an online community of individuals who hold tokens that enable them to vote on changes in governance. So there is a very hard nut to crack by US regulators, and this is why those regulations took that long time, that many of those solutions are almost impossible to track and hit by those entities like torrents were. So whenever the Pirate Bay closes down, the many similar sites are being opened by members, or at least the people that are acquainted to those members by very similar domains. So who will be the one to bear the burden of this responsibility of regulating this sector? That's the question that really right now arises. That's very interesting how that will finally go, because that's very, very, I would say, difficult. So I think the only one thing that the governments may do in this case is just to scare people from using cryptos, and that is why there might be some of the disinformational campaigns being run. However, on the other hand, Blackrock launches spot Bitcoin private trust for US clients, and it also claims that despite the steep downturn in the digital asset market, there is still substantial interest from some institutional clients in how to efficiently and cost effectively access these assets. So we can find that even with trying to discourage the potential buyers, there is still much of an interest, because clients, customers and investors are not stupid. They have access to internet, and they can write and watch such media as our Blockrevision channel in order to find out what's the truth, of course. So when will be Ethereum March? Recently we gone through a Goerli testnet in which we have found that that was the last testnet before introducing a main network on Ethereum second layer. In proof of stake, so-called validators use their stacks of Ether in relation to what this new consensus mechanism may bring. In contrary to what was proof of work, where powerful computers have solved different puzzles. So the whole crypto space is awaiting for this event, with this switch to happen that has been initially introduced in some plans already a few years ago. That eventually happens, and this one is expected to come over at around 13th of September. Hopefully this 13 will be the lucky one. So if you wanna track the development and the state of this introducement, we can find that when March.com is the site that the time is displayed. So Ethereum miners recently have faced an abrupt change following the merge. That's what have been just brought by me, and we can also find that many of miners are hedging against any potential disruptions in the Ethereum blockchain during this shift, and that's why we could find that also there is a backwardation on Ethereum futures contracts, within which there is still a bit of an anxiety, pre-merge anxiety, that finds that some of the community is not really into this shift to happen, because it's the biggest mechanism consensus shift that happened during the 12-year history of cryptocurrency. All eyes of the cryptocurrency enthusiasm will be turned to this event, possibly. And right here, I'd like to brag to you with our recent type. So we have tipped that Ethereum Classic should have another leg forward after this exactly line been crossed. So if you just have tracked my guidance, you may have profited on the amount of around 15% by now, and the coin is still rising to possibly 50-ish areas of psychological manner. For today's trade idea, just hang on a while. At first we just crypto outlook once again appeared, but I meant market movers. So market movers, on Thursday we had core PPI from US that been yesterday discussed, and this shown lowering tendency. However, unemployment rate in France is still on a kinda controllable territory. We are heading back to this pre-COVID times. In terms of Great Britain GDP growth rate, quarter over quarter right now has contracted, and that means that the UK's economy is right now going through downturn. However, even bigger downturn has been noted in the beginning of 2021. That's why there is still nothing to bother right now. In terms of other things such as inflation rate, we have already discussed, and import and export prices, that's something that already been attached, and export prices has lowered due to lowering prices globally. However, sorry, that's not the one. Import prices also get better. That's why we might be right now recovering after inflationary period. In terms of earnings, on Friday we have broad breach that right now is about to be published here, and still awaiting some of the names, but there is not very much of importance, as I would say right now. In terms of trade idea, I have for you natural gas futures. So NG, where we got it, yeah, NG right now is trying to rise to the levels have been noted yesterday and at yesterday's high, but right now we are just having problems with this barrier to get crossed. Right here we may have found that we have formed a very strong and large shooting star that symbolizes that another move forward will be of a much of a difficulty. With this one move downwards, we have nearly entered a major slump, but this double bottom, this so-called double bottom, has stopped us, and right now we may find that this reaction has found the local euphoria right here. Yesterday's natural gas price has risen by around 8 to 9% in the critical moment. That's why we may find that we've already may have found a top that has aligned with this shooting star. So this power candle, this daily candle, symbolizes in this time that there is a kind of a euphoria on a natural gas that's supposed to be stopped by previous reaction back in the second half of July. Also, we may find out what's the sentiment around the markets. That's the neutral that doesn't speak very much. However, on the commitment of traders recently, do we have it updated already? Because it's updated every single Friday. In terms of this one, the 5-day period or monthly period, we still haven't updated this one. However, recently on a long versus short statistics, we have found that by 2nd of August we have so many short positions. That they had to be cut out of positions. So 2nd of August was the one that has entailed many of investors that were seeking for shorts, but they have surprised. That's why after taking out and clearing out the market, we finally may get a reverse from here. And if you'd like to make projections of what may happen for natural gas, it's worth noting that it often goes in tandem with crude oil prices, and crude oil right now is rejecting the 95 level. That's why that's also expected to move lower back to around 86 area, 85 area. So I do find the bigger alpha for natural gas, and with this one to happen, we are finding there is exactly right now the possible good position to have an entrance into a bearish side. This recent price action may point that we may reach these levels of 8.9, and if we just tackle to get to this, there what I find, there's a good chance to take a short position with a stop loss of here right above $9, and the short position may extend even to levels that haven't been seen for a while. Oh, trade idea has disappeared. Yeah, we can find. So this short may even get with a risk-reward ratio at 18.9. That's for those that are really patient and are willing to wait for bigger profits. So with this reaction of recent, we are expecting this price to revert and finally break those lows at 7.7, moving towards back 6.4. So remember about risk management, about controlling your positions, and also adjusting the size of position to the trade. So that's it in today's episode. Have a great weekend and see you on Monday.